Hello, it is time for the September edition of our reader questions from the Taking Care of Business blog. Once again, I am Leanne Cassavoy, Senior Associate here at Civitas Strategies, and I am here with our President and CEO, Gary Romano, who is ready to answer your questions. We got a lot of questions this month, so we're going to go right into the first one. First question, is there really a law that states that disclosing our childcare tuition to another childcare owner is illegal? Is the act of disclosing my tuition against the law, even if I am not conspiring to price gouge?
So this can be very confusing. And I know I see this all the time, especially online on the groups. You'll see providers will say, what are your rates in Southern California? As innocuous as it may seem, it is considered to be price fixing under federal law. So the Federal Trade Commission would hold you to price fixing. Some of the differences are, you can advertise your rates. That's not a problem. Like if you want to put them on your website, put them on your website. If you have, I know in some cases, either locally or at the state level, you are required under certain circumstances to have your rates presented on a searchable website. Perfectly legal. You can put the information out there like that. The problem is when one or more providers are doing this in a way that doesn't project it so everyone can see it. So even if you say, well, it's our local association got together, everyone in the association could see it, that still doesn't mean the public can see it. This also, and the FTC says this right on their website with price fixing, it says, even if you are not gouging, it still counts. And the reason is because even if you say, look, I checked all the prices and I should stay level, that's not necessarily being fair to consumers because maybe otherwise you would have dropped your prices. Or if you do drop your prices, maybe that's not fair to the competitor who couldn't be in the room and to know that they're higher priced. And so they have an unfair advantage. So it is, be careful with it. It is technically price fixing.
All right. Good information. Next question. I have been in the process of getting licensed for 4 months now. With school starting soon, I have families in need of care. With the county taking its time, I am wondering if I can legally take on these families as long as it's not more than 30 days in 12 months. I have heard of this exception, but I am unable to find it in writing. I have been providing care for one family since July, and I have all of my licensing classes done as well as my CPR certification. I just need a background study, but I'm unable to get that done until the county starts the process.
So, as you all know better than I do, right? The licensing differs from state to state and community to community. And so in some cases, there's very restrictive licensing requirements. In others, there are options that you have for being unlicensed and still, caring for families, et cetera. So it's hard for me to say specifically without knowing your community and state what it is definitively. What I would say is conform to those requirements. Just because you're close doesn't mean you're in. And if you're close, it means you can end up in a lot of trouble. And that could derail your entire process because the state or the local body may say, you got way too far ahead of yourself. So just make sure you're conforming. If you can't find it, don't know what to tell you, but please, do make sure that you have some sort of confirmation before you go ahead.
All right. Now we're going to go into some questions about taxes, one of our favorite topics. So first question about taxes. Why is it that you can replace all of your carpet with a new carpet and it is considered a repair, but if you replace it with anything else, it is considered a home improvement?
So I would answer this with, if you replace all your carpet with a new carpet, it may be a repair. So let's remember what a repair is. A repair typically, and one exception are roofs, and we've talked about that in previous videos, so take a look, but I won't go into that. Let's go into flooring or other similar things. The IRS looks that it is being replaced. IRS is saying it's a repair if you are using materials that have a similar function and are of a similar quality. So, for example, if you replace that carpet with carpet that is, of a similar quality, the IRS would say, yeah, that's a repair because it has the same function, it's carpeting, and, similar materials. When you start to go to a different material, like let's say, for example, you take the carpeting and you put in all new let's say bamboo wood flooring, right? Um, the IRS then would likely have an issue with that because the flooring not it has the same functionality, but the materials may lead to an increase in value. And that's part of what the IRS is looking for implicit in that is, have you done something that increases value? So again, like we often talk about you know, kitchen renovation. So if you have that Formica 70s, 80s countertop, like many of us have had, and you replace it with something very similar, hard to find Formica nowadays, but if you find something, kind of a similar quality, they would say, yeah, that might be a repair, right? You're replacing with similar materials. When you get that high-end imported Italian marble, now suddenly it's different because that has increased the value of your home, even in a small way. So, again, think about it when you do those replacements of items within your home, that think about, is it a similar material? Is it similar function?
And the reason this is the tax question, right? It's an improvement would have to be depreciated, where a repair could just be typically straight up deducted in that 1 year. Is that the key?
That's absolutely correct. And again, when we'll talk, we've talked about depreciation in the past, it might be able to be depreciated through accelerated depreciation 1 year. So, but you would have to then go through that flow chart and say, where does it fall in depreciation versus
Mm-hmm.
a repair, even if it's above that $2,500 number, where we then start looking at depreciation, you'd be able to say it was fully replaceable. And I should say, and that also brings up another point, which is time space is still in effect. So
Yep.
don't forget that, exclusive, regular use, et cetera. And I know we'll talk more about that in a bit.
Yep. Okay. Another tax question here. My wife does in-home daycare. We have three children under the age of 11 that count against our numbers. So I think when they say that, they're meaning count against, they can't take more
Their
children
capacity.
on
Yeah.
for their license. Okay. Is there any way to claim the wage loss for these spots or claim them for childcare expenses when doing our taxes? Obviously, we don't pay for their daycare out of pocket, but we are losing those three spots for income. And I can't find anywhere if we could claim daycare expenses like other families do with their children.
So unfortunately, no. And so, here's the challenge, right? Is there's no revenue to deduct. And I know you're foregoing revenue, but the IRS would say, well, but you're caring for your own children, so you're saving money, right? By not having
Mm-hmm.
to pay somebody else. Could you theoretically pay your own business to care for your children? Theoretically, yes. The challenge would be then you'd have to report the revenue for the business itself, right? So it becomes kind of a zero sum game. So the easy answer is no, unfortunately, you can't. I understand the frustration with it, but those are the rules.
Mm-hmm. Okay. Another tax question here. How do I calculate my time space percentage when the home daycare is not in my house, but it is on my property beside my house? We have a 900 square foot building. The utility, water, and all bills are tied together with our house and the building.
So it's a great question, and it opens up. There's been a lot more conversation about this at the IRS because we're seeing a lot more people have separated buildings, usually sheds, believe it or not, that they're converting into home offices on their property. And this is for not, of course, for childcare. You're not packing all 12 kids into the shed, but just saying, and looking at this question, it was kind of fun because this is coming up a lot more. What you would need to do is you would need to include the Morton building in your full square footage. So as you do your time space, this becomes additional space. So you're going to want to handle it accordingly. So what that means is you're going to want to think about, is it regular use? Is it exclusive use, et cetera? How does it fit into that equation? And then, of course, ultimately, the costs are going to be prorated based on that equation.
All right. Next tax question. Still have a few more. We have been awarded $882,000 for the accelerator grant to build a new childcare center. It will all go to the contractor. Will I have to pay income tax on this?
Well, I mean, typically, yes. So what I mean by that is you do have to report the income. However, if it's all going to the contractor, you should then have a deduction for the expenses associated with it, right? Those payments to the contractor. So, it should be a wash. And a lot of times we do see that with the grants when it's going to things that are refurnishing or expanding the
Mm-hmm.
operations. But yes, you would have to put the money down under revenue, but you still get that expense.
Okay. And now I'm going to ask you a similar question, and this might be the most common question we get. I received some grants due to being a daycare provider here in Minnesota, some stabilization monthly grants and a revitalization grant that purchased 50% of a new water heater and a sandbox cover. Do I add these grant payments to my child care income or as general income?
So what you would what so there's really two things here that I want to make sure that we cover, right? So one is yes, you would add it to your business income. So this comes into your business, you add it to your business. And if you're doing business as, and I think we have one of those coming up, like if Leanne has like Happy Bear Childcare and that's the way she does business and that's the way the state money came, definitely it's clearly business. But let's say she doesn't do a DBA and it's
Mm-hmm.
just Leanne Casavoy, childcare, then in that case, even though it's in your personal name, you would want to account for it as business income because technically it's coming to her as the business. The other thing to be aware of is that remember, you're still subject to time space, and that could work for you or against you in a case like this. The grant rules aren't always the same rules as taxes.
Mm-hmm.
They should be, but sometimes they aren't. So in this case, yes, they paid for 50% of the water heater, but my first question would be, what is your time space? And that might be less than that. It also might be more. It wouldn't be unreasonable to say, oh, I have a 75% time space. So in that case, your deduction may be even be bigger than what the grant paid you.
Mm-hmm.
So keep that in mind. Just because the grant said 50% of this doesn't necessarily mean it supersedes the normal rules for taxes.
Okay. And we do have some information that I can link to on those topics. That when we post the transcript of the video, I'll put those in there for people to refer to for more information. Okay, I'm going to go into two similar questions on depreciation and deductions. Here's the first one. We did our home improvements over 2 years. It was a kitchen remodel, new floors throughout 2 levels of our home, all new trim and doors, painting, new ceilings, etc. My question is, can I just lump it in all together when I go to depreciate? Or do I have to do things separately, like kitchen cabinets, counters, flooring? I am doing my 2022 business taxes now. Oh, and the things we purchased to do this improvement, like paintbrushes, small tools, etc., should they be separate or with the improvement?
This is a great question. So let me break it down. Can you put it all in together? You can. Um, very likely you're going to end up in a situation where you're going to have to depreciate that over time. The IRS does allow you, if there are distinct kind of sub projects as you're describing, to break those out for depreciation purposes. So it may not be in your best financial interest to do it that way. So I would strongly recommend if you do have, let's say, a cabinet company that came in and it's a separate bill, to look at that as how does that affect my chances of depreciation and accelerating
Mm,
it versus I want to lump it all together. In terms of the paintbrushes, small tools, etc., could they be included? Yes, theoretically. I would again think about how you're prorating it. What is the business use versus the personal use? If you're buying, a new power drill, is it really just for the business? And maybe you can justify that. You can say, well, if the IRS comes tomorrow, they'll see I never use this power drill anywhere except for work.
hmm.
Or is it mixed use, in which case you are going to want to prorate it?
Okay. Very similar question. I remodeled part of my home. I know this needs to be depreciated, but what about the things that we purchased to do the projects that are not actually part of the remodel, like the tools needed to spray the new doors, drill bits, etc.? I think this is kind of what you just talked about. Do we
Yeah.
include these in part of the whole project?
And this is an important reminder, they wouldn't be lumped in. And I should have made that clear with the last project, is that even though you did it, together, this is equipment and supplies versus the remodel itself.
Hmm.
So they would be separate expenses. And again, you would want to use time space or a similar method that's defendable in terms of what is the business versus personal use for them.
Okay. And another tax question here. My driveway is falling apart and I am afraid a client will fall and hurt themselves. If I repave the driveway, is that 100% deductible on my taxes?
Unfortunately, no. So even I hear that there's a health hazard for the kids and families, but ultimately it would be considered a common area improvement and subject to time, space, and even potentially depreciation.
Okay. All right, I'm going to read you a sort of detailed, complicated question here, and then Gary's going to provide us with the answer for this one. I purchased a childcare facility with a business partner in January 2022. We were using the same QuickBooks account as the previous owners when we realized all of our payroll taxes, etc., were going toward the old owner's EIN number. We have tried to straighten things out with our tax professionals, and I do not believe it is there yet. And then my business partner decided to walk away. So I'm now trying to figure out how to restructure the business, the EIN, straighten out taxes, and open a new location, which is in my home. I'm considering getting a new EIN number for the in-home location and just doing business as the name of my other location. Is that an okay idea?
Wow. So this is a complicated one, and I do not envy you being in this situation. I'm sorry you have to be in it. I can only imagine how dizzying this is, and how disconcerting, especially if your partner walking away. So again, like let's break it down though into pieces. You shouldn't use the same EIN. That's correct. Even if you buy a business, you're supposed to, like, even if let's say I bought Leanne's childcare business and I bought it lock, stock, and barrel, everything, bought the toys, I bought the books, I bought everything. It still should have a separate EIN. And that helps signal to the IRS it's now under new ownership.
Mm-hmm.
As for the partner, yes, you're going to need to restructure. You're going to need to close out the partnership. This is one of those times where you're going to want to talk to a tax and or legal professional about doing that, because as it will vary in your state and there will be some requirements. On the new location, again, that's going to be a separate EIN. That's going to be, and likely you're going to want to structure that as its own separate business. And it sounds like you may have, so that may be a
Yeah.
moot point.
Okay. All right. Excellent advice. And now we're going to ask a very similar question. Since 2018, our daycare was under a 50-50 partnership between me and my older sister. Earlier this year, she suddenly died. My question is now what? I assume the partnership ends, but I am still continuing in the same business. I am guessing I would need to open up under a sole proprietorship, correct? Also, since she died in April, 4 months into the tax year, how does that work? Do I file 2023 under my new sole proprietorship or file as a general partner under the partnership for the first 4 months, then sole proprietorship for the remaining 8? I did apply for and was given a new EIN under a sole proprietorship with the starting business as of April 2023. Is that or was that okay to do?
So first of all, our condolences for your sister's passing. Again, we just talked about how difficult it must be to have, this partner who left this other business, to lose your sister so suddenly and have it impact not only, of course, your personal life, but your business life. I can only imagine how difficult it is what you're going through. But at the same time, you're doing the right thing, which is that you're thinking about, okay, I still need to make sure I'm complying with the business. This gets a little bit tricky because we don't have all the information. So first thing I want you to think about is how you settle your sister's partnership shares. This may be very easy. This may be something where you say, well, Gary, we had a buy-sell agreement. We had something in writing that said, I get the shares. There could be something there. However, if there's no succession plan, no agreement in place, then it's something where you may need to work with the estate and her heirs to work out the disposition. Like, in other words, the shares don't go away. They have to go to somebody, and that might even require probate. I'm not trying to freak you out, just trying to be honest with you. And then at that point, the question is, what happens to the partnership? And so what you may end up with is, if let's say I died and one of my kids said, yeah, I'm going to keep the shares, then you may have to say, what do we do with the business from here? Or it may be something where my heirs say, we really don't want to be a part of this, or we're not old enough to be a part of this. Let's just liquidate it. But in that case, if the partnership is ending, you have to liquidate the assets. It's like any other business going out of business. Now, that would then require what you're doing, starting a new business, right? But there has to be something accounting for what happened to the old business and its assets. And it could be that maybe, you have some sort of deal where the heirs say, you know what, Auntie, we don't want it. We're glad for you to move forward. We'll create an agreement that says you can sell everything to your new business for $1 and we'll move on. But there should be that moment where you not only shut down the partnership, but where you say what happened to everything with the partnership.
All right. Our next question is about a retention of childcare staff federal grant. We are a 501c3 tax exempt run daycare. When we disperse these payments to our employees, do we run it through payroll for it to be taxed, or do we run it through as non-tax payment since it is a grant for retention?
So in this case, it's considered payroll. You should run it as you would any regular pay that you would do, and move on from there. There's no basis for it being non-taxed.
Okay. I think that's a theme with all of these grants that child cares are getting.
Yes.
Unfortunately, they are all subject to taxes. Okay. Can you tell me if it is better to be on the food program where they reimburse us tier 2 for 2 meals and 1 snack per day? I know we can add another couple of snacks per day on our tax claim. Is it best to keep track of all meals and snacks and add to our tax expenses? And then specific questions, how much money can I claim as expense for a breakfast, lunch, and each snack per day per child, which is better?
So what I would say is, a couple of things in this, right? Number one is, remember, you always need to keep track of snacks and meals. Whatever you're doing, whether you're on the food program, as long as you are using, if you're in the food program, or if you're not in the food program and using the standard rate, right, for your deduction, you do need to keep tracks of snacks and meals. And it's so funny because this week on a Facebook site, I saw a similar misconception that I can charge, up to the max every day, whether the kid is there or not, whether they ate or not. Not the case. And what I would say is, and without going deeply into the numbers, because we do have a lot of questions today, generally, and I could even say more absolutely than that, I've yet to meet a provider who didn't make money off the food program, which is not to say because they're shortchanging the kids. It's because the government is wrapping it into that fee payment for your time and effort, doing menu prep and doing the training and doing the paperwork. So, I've yet to meet a provider who doesn't get more from it than they do than their cost of food. So I would say in general, go for it.
Perfect. And I will put a link again with the specific rates for the current year.
Oh, that's great. Thanks.
Yeah. So we don't have to have those memorized. All right, next question. There was a bit of a dispute with a family that I had to terminate. They weren't happy and started throwing accusations at me. I am wondering for the future to keep my bases covered and to keep me safe from accusations if we can use recording cameras in the licensed home daycare.
So I would be very careful about this. Most states, and the rules do vary by state, do have rules about when you can record conversations and when you can record them and use them in legal action without notification.
Okay.
And even with notification, it could be tricky if you had something blanket that said, you agree that we will always be recording you. So I would tread very, very carefully on that because you could easily have this whip around on you and cause you more problems. I think better yet, have clear parent contracts, have clear policies, and enforce them, fairly and effectively.
Okay, perfect. Another question. I would like information about closing my licensed daycare when I retire. How will it affect my income tax?
Gosh, I mean, this is a very complex one as well. And a lot of it depends on your personal financial situation at time of closing, the business's situation. Very similar to what we discussed in the partnership a couple of minutes ago, you will need to liquidate the assets. So remember, when the business goes out of business, that's it. Now, that means there's potentially depreciation recapture. You might have to pay taxes on that, liquidation of it. Maybe you have one really big yard sale where you sell everything. On the other hand, there may be things where you say the useful life of this toy is done, right? And so it really has no value, but you do want to go through the process of marking that. And you do want to also make sure that on whether it's a corporate return or whether you're a sole proprietor, that on that last return, you do note that it is the final return for that business.
Perfect. Next question. I received a form delegating powers of guardianship from mom to mom's parents, the baby's grandparents. This form is only notarized and not filed through our county. The grandparents do not want mom to pick the child up from daycare without their permission. Since this form is notarized and is signed by mom but not filed through the county, what happens if she shows up to pick up? Can I hold the baby if the grandparents aren't okay with her going with the mother? Is that legal?
This is another case where I'm sorry you have to go through all of this. This is extraordinarily complicated. Unfortunately, my recommendation is to seek legal counsel. There's
Hmm.
several issues that could be in custody agreements, that could be enforceable with the courts, some that may not. And so this is a place where you do want to seek legal counsel. And I know we're seeing more and more of these very complex custody situations. And in some ways, it's heartening that these children have different adults in their lives who want to care for them and be engaged with them. But I know that navigating what is legal and what isn't can be difficult. And unfortunately, I'm always given the same answer, which is seek legal counsel
Hmm.
because these can be very complicated. And of course, as you all know, just as well as I do, when it comes to families and children, those emotions can get very high very quickly.
Absolutely. Okay. Excellent advice. Next question. I am a large family childcare and I have 12 children enrolled. I have one assistant. Our numbers are lower than expected, and I may need to lay her off until I can increase our enrollment. This year, we may change to a school age program. I do pay into unemployment, but I am worried how this will affect my unemployment insurance. I do expect it to increase, of course, but I don't know by how much. I currently make under $80,000 total per year. I've been reading how unemployment insurance operates, but the figures are based on million-dollar companies.
So unfortunately, and again, I feel like it sounds like I'm on Facebook all the time, but just this morning I was looking at one of the Facebook groups for childcare owners, both centers and family care, that this is a scenario that we are likely to see coming up as we hit the ARPA funding, that stimulus funding ending.
Hmm.
And so I think this is one where even if you're not there yet, if you have an assistant, you have an employee of any kind, listen carefully. If they are W-2 employee, yes, they are eligible for unemployment. If they are a 1099, many times we'll hear providers say a 1099 employee. There's no such thing. There's a 1099 contractor. Contractors are typically not subject to unemployment. But if they go to ask about unemployment, this could lead to questions for you about their employment status. So be
Hmm.
mindful of that. In terms of the increase, you may be subject to an increase. There's always that chance. It isn't automatic. It isn't like, for every time person shows up at unemployment, it goes up. There's a number of factors that come into play, such as your business size, how many people you've laid off in the past, and those sorts of factors. My guess is I think it would be very likely that you would not see an increase, but I can't guarantee it. I can't say you never will, but on the other hand, I can't say you definitely will get one. I would be very surprised if you did.
Okay, great. I'm jumping back into taxes now with a tax question that wasn't grouped with the other one. Here's the question. I built a home with an unfinished basement. After moving into the house, we finished the basement. Half of that basement is 100% childcare use. How should the expenses of finishing that space be handled?
So again, I would do this as you would any other time space, right? So if it is 100%, childcare use, then yes, you have costs that would be entirely deductible against the business. Again, you want to think about opportunities for where depreciation may be come into play. The question here is, I do want to remind people because this does really happen in real life, that if the IRS audits you, they will. The audit guide, the official audit guide from the IRS says go through the house and check all the spaces.
Mm-hmm.
So in a case like this, if you're claiming that half the basement is 100% childcare use, I would make sure that it is clearly denoted. So for example, maybe you have a half wall and a gate going across your basement. That's a great way to do it, right? But if it's just the basement is entirely open and there's kind of some of your stuff here, some of their stuff there, and you're just
Mm-hmm.
kind of saying half the space is childcare, 100%, I'd be very careful about that. Again, I always say to people, if you're claiming exclusive use and you should, wonderful, do it. Don't ever pull punches if you don't need to. But if there might be a question, if somebody else who doesn't know you, doesn't see your operations every day walked in, would it be clear to them that this is exclusive use?
All right, excellent. Next question. I have a family who met with me over a year ago and agreed and signed my contract to start when their baby was born. The baby was born 3 months early and was in the hospital for 9 months on oxygen. The baby is home now and is a year old, but still on oxygen. The parents would like to bring the baby to my home childcare. They did pay a holding fee of $50, and the handbook states that the holding fee will hold this child's spot until childcare is needed. However, I do not feel comfortable in taking this child on oxygen uh, with additional health issues as well. The reason for that is I have other children I need to tend to and cannot give this child the one-on-one attention I feel he will be needing. I also am not trained for the medical issues that this child has. What would you suggest I do? I feel the family will go after me for discrimination.
So again, this is another very complicated case, and I absolutely get why you're worried about it.
Mm-hmm.
There are parts of it that worry me.
Mm-hmm.
However, I don't have all the facts in front of me, and I don't even know which state you're in. So again, I would suggest seek legal counsel, talk to an attorney about
Mm-hmm.
it, help understand what the ramifications are for state and local laws in this particular case. And again, they can look through all of the evidence you have, all the paperwork you have to make sure that you're covered.
Okay, perfect. And now we have made it to our last question. I have a small family childcare business in my home that's been here for 29 years. I have never paid business property tax. It was my understanding that childcare providers were exempt from this tax. Recently, I received a grant for $18,000 for improvement to my childcare. The check had to be written to my family childcare business name. My bank said I needed to open a business checking account to deposit the check, and I had to file a DBA. After filing the DBA, I received a letter from the assessor's office that I needed to fill out a form and pay business property taxes. Before I do this, I wanted to get your advice.
Absolutely. So, without knowing the details on the type of tax, it's hard to say definitively if you would be exempt or not. I can't really think of a reason why you would be just exempt right off the bat. So, for example, in some states, there are, you either are subject to residential property tax or commercial property tax. So, in a case like that, yes, if it's a commercial property, then yes, you're subject to commercial tax. If you're residential and you're an in-home care provider, that would be your tax. But without really knowing it, I couldn't say definitively, here's why you would be exempt. And I have a lot of questions as to whether you would be. It would be very unusual. What I can say is that, yes, we saw this a lot with the funds that were going out during the pandemic. If it has a name other than your personal name on it, yes, the bank should be asking for a DBA. Sometimes they don't, which is even more surprising. But yes, you'd have to have a DBA needed to deposit it. If it isn't in your name, you do have to have it registered that this is my business name, and that would have to be on file with the bank.
All right. Excellent. Well, thank you, Gary, for your time. Lots of questions this month. And thanks to everyone who sent
I'm
them
going to
in.
interrupt you for a second, Leanne. Thank you for your time. I think people don't know how much time you put into assembling these questions, getting them ready, and then, getting this all together. So thank you for your time on this.
Of course. And it's always interesting. Everyone sends in some great questions.
Yes.
So keep sending them in and we will keep answering them. All right. Thank you so much.
Take care.
Bye-bye.